is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting day of the Power Trading Hour with me, your humble, lovable, squeezably soft host, just making my own way. The S&P up 16.5 points, 2.2 billion shares, and we needed probably in the neighborhood of about 4.3 billion shares to really get me excited about this high at 1999. We're going to test 2,000 here probably in the next few seconds on the S&P cash. Of course, going into fund buying, and at least the stuff that I saw showed that there was probably not a lot of cash coming in. There was enough coming in and going out. So I wasn't really too worried about that. Probably more worried about, if I'm bearish, more worried about once you get to this time of year and try to get a meaningful pullback other than a couple of days after Black Friday, which sometimes you will get some pretty nasty sales numbers, and then that will be it. And, when we look at this, the question is, well, do we have a lot of volume? No. Can we get it before the end of the day? Yes. Is this significantly lower than other ones? Yes. I'm kind of looking at the canary in the coal mine as Apple. It was down to 105.90. I'm thinking that if this thing does break 106.75, closes below it, then we could have the signs of a fairly, not just momentary top, but a long, long top. And it's, we'd need one more confirmation, but that's kind of what I'm watching by the end of the day out here. I was out of my index positions, so all I'm looking at now are a couple of individual positions and a kind of a longer term one on the VIX that I'm on the wrong side of. But nothing new. If you're a trader, you're going to spend a lot of time on the wrong side of the fence. The big thing is to probably limit your losses on that side and take the big ones when they come and when they're made available. I say often that this is not a game of football where you have the, whatever it is, 72 Dolphins that win 16 games in a row, including all the preseason games. It's more like baseball where if you hit 350, you're a millionaire or a billionaire. And it's got to be one of these guys that I think if you were part of a team like the Dolphins or something, how horrible would it have been the years after that when you played on a team that wasn't quite that good? It's interesting to say the least, but up 16 points, 2.2 billion shares, so not a lot of volume up here. Could they just hang this thing out for the next few days of fund buying? The answer is yes. And we'll look at it. But to me, I suspect that the weakest stock I'm looking at right now that would move this market is Apple, and it's printing 107.10 and close below 106.75. I think would be a big signal out here that the top of the false breakout for Apple is over. And we're going to talk about one of the reasons why I think Apple has hit some kind of all-time high here, and it's going to be problematic for them over the next year, but we'll talk about that in a moment. In 1938, on this day, the War of the Worlds was, hang on here, I got to move something around here. The War of the Worlds was playing tonight, actually, in 1938, and like so many things in history, you get a very warped view about what actually happened. Everybody thinks that, of the people in the United States, about 150 million at the time, 140 million, that 20% of them were listening to the radio that night. The answer was that even though radio was fairly hot, and RCA, of course, the biggest stock in 1929, the Apple of its day, the real big thing was that there were probably about 2% of the United States actually listening to it. And, of course, a great deal of brouhaha was made over people actually believing that aliens had landed on the planet and started wiping out, Grover's Mill. But anyway, it was very interesting. The idea here, though, is maybe everything we think we know is not true. And in the case of this War of the Worlds episode, there is a much deeper backstory on it. Did I get this in here? Maybe I didn't. Let me find it here. I think it was in history. I need to go up one and over one, because I actually got this just for this. So, do I have it? Yes, I do. I just want to make sure.
We know now that in the early years of the 20th century, this world was being watched closely by intelligences greater than man's, yet as mortal as his own.
Well, what we did find out were there were a couple of car accidents and a few people that actually said that they believed it, but probably less than 100 people. Over the coming days, though, a willing press who had seen the revenues from print advertising pretty much drop in half over the last 20 years because of radio, decided to gin up a lot of problems about the War of the Worlds and how you couldn't trust its news, and that if you really wanted to trust the news, you had to listen to a great deal of what we said in the press. The radio, that's just for flakes. And it reminds me a great deal of the argument now about bloggers and other people that come up with the news. It just can't be true. It's not the approved upon news. But when you dig into it, there was a lot of collusion, and it never was a problem for H.G. Wells. He was back the next week on the Mercury Theater with The Heart of Darkness, one of the great Joseph Conrad books. And did it. But he continued on, made some great movies, never really hurt him a great deal. There were some lawsuits. They were all dismissed. There were a lot of claims about the way people maybe accidentally tuned into it. Those were pretty much disproven. And it basically came down to this. The press did not like radio, and they were going to take this opportunity to beat people over the head with it and make a much bigger to-do about it. Later on, when these lawsuits started to go to press, a lot of, well, I kind of thought that way when I did it, and nothing really happened. And then 2 days later, I had a car accident. It was all about it. It was a lot of over-the-shoulder, driving in the rearview mirror kind of comments that all fell apart. And there's some books on this. But just remember that everybody has an agenda. When we listen to the press, whether it's the radio or the newsprint or cable TV these days, and nobody is immune from it. And it's just kind of interesting to see that what everybody thinks was a big deal and people jumping out of buildings, there wasn't actually one death that could be attributed to this. And, of course, we see hysteria these days with things like the nurse that won't stay in quarantine, other things like that. Sometimes it's a lot more than we make it out to be. Sometimes it's just being, I think in the nurse case, we could say, we'd rather be safe than sorry, right? And maybe what her problem is. One of the other things, and really people started looking at it after that event, was what they called a information cascade. This is kind of like when one person sells in the market and someone else sells in the market because the first one does, because they think that they know something that they don't know. And a lot of the early work in psychology about information cascade goes back to this. But pretty interesting reading, especially as traders, we really need to be thinking about how we think of what Jesse Livermore, I think it was actually Wyckoff, called the composite man. The man who actually was kind of the average Joe six-pack is what we'd call them today, and how they think. And a lot of work actually started off this in being able to disprove what people did. And one person drives crazy, and then you see 5 people driving crazy, so you start driving crazy. I remember one of my friend's dads, so I liked a lot. He was his name was Roger, and he was great. And I think we were about 15 years old, maybe 16 years old, and he said, just for fun, just start pointing up at the corner of that building. So all 3 of us are standing on the corner of a building in downtown, pointing up, and people are walking up and down. Pretty soon we got about 50 people all standing behind us, all looking up, some of them even pointing to the corner of the building. And that's probably the best explanation of information cascade that I can give. But it does tend to roll on to each other. So we're going to keep an eye on this market out here. But again, I am watching Apple. And one of the reasons why Apple is interesting to me, and I think I will probably keep on the short side with a close below 106.75, is the way it was trading over the last couple of days. I've read tapes for a while, and it really looked suspect to me when we talked about yesterday, when I thought maybe we'd have some weakness in Apple out here. But I didn't know what it was, but I saw it last night, and I think this is what people were thinking about when they were trading Apple yesterday, and that was that IDC came out with numbers on the sales. And of course, 2 years ago when we came on the Tech Insider, we talked about Samsung being 20% of the market, and then a year ago or a year and a half ago, 50% of the market, and the last few times 83, 84% of the overall market, or actually Android was. What do we find out last night and this morning was that the company called it Xiaomi, which we've talked about several times before in China, is really racking it up. They basically went from 2.1% to 5.3% in 1 quarter. Actually in 1 year. But what is more interesting is what they say that they're doing, and that is that they could easily be in somewhere between 3 and 6 months the 3rd largest seller of smartphones by just selling in China and just some of the places like Vietnam and some of the smaller countries. They wouldn't have to go very far. And Apple could be actually a 3rd place leader behind Samsung and way behind the Android juggernaut. We'll be back in a minute. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yeah, we got a little news coming out. Well, I talked about it a little bit. I almost tried to play it, and that was GTAT. Thought that Apple may try to buy them out. Yeah, I think I lost a nickel on it when it was trading around 50 cents. But somebody's posted in the den that the documents are going to be unsealed. And I know Apple has been trying to keep those under wraps, but it looks like they're going to be unsealed, which will get a little bit better view. We had some view about it, but it is interesting nonetheless. Maybe that's what the market is reacting to. But watching Apple closely here, 106.95. I think that 106.75 and below would tell us a lot. And we still have plenty of time left in the day, another hour and a half, to see this market move. 1995 on the S&P cash, 2.4 billion shares. Up just a hair under 13 points on the S&P cash. So we'll keep a close eye out here on it. Wanted to see what else. Did I actually have? I actually got two of those up. So excuse me for just a second while I get this going. Wanted to look at a few companies that were moving out here. Also, kind of muted moves in Europe. FTSE was up 0.2. France was up 0.7, which was the strongest. Spain was up 0.2. Portugal off 1.5%. Greece was the big one, which was off almost 3 cents. They're having all kinds of political issues once again, so you may want to keep your eye, if it's on Europe, around Greece and the problems with that. They may be just trying to get a little bit more out of what the EU was going to give them. Of things moving out here today, we had BBD, which was, of course, the South American bank. Up a little up here, not too big a deal. Upgraded to overweight, no big deal. Probably the bigger one moving the market right now is Visa. And, of course, they've broken above the previous high. You wanted 9.5 million shares from the March 21st high. We've got that pretty much right now, and it does look like it's going to hold it. You need to be probably your risk out here on Visa is any close below that 232.67 March 21st high. If this pulls right back in to that trading zone, could you see this gap filled? And I think the answer is probably yes, as we watch this market. But keep an eye on it. A close below yesterday's pretty much move of 1989 on the S&P cash would also be a little telling out here. But I'm watching some of these. Of course, these are not really giving much back out here out of this move today. What else do we have? Gold Corp, isn't it? GG. And, of course, gold closed lower. A lot of these companies are fairly low. Again, we do have some fairly decent confluence lines setting up. If you get just a little bit lower in this thing and you were looking for a bounce, you'd probably want to be watching this. My guess is you're probably going to have a little bit move a little bit lower tomorrow going into a Friday. Is it going to be bigger? Much bigger? I don't know, but it certainly has blown through the lows of $20.54, that December 19th low of 2013. And with 14 million shares, you're 40% more volume out there. Traded with a guy that always had kind of a Goldilocks kind of thing, and that was not enough volume. Volume was just all right. Volume was too hot. And volume not enough, then, of course, you close back in. If it's right, then you probably have a fairly good move out there. And a lot of times you look for maybe 150% of the volume, or 50% more, let me put it that way. Maybe 200% more. But you got 400 or 500% more. Likely what happens is you get that exhaustion move. And that's kind of what you'd be thinking about. But what can I say? Anyway, you can give me a call at 877-927-6648 if you like. BWA. Let's take a look at that. BWA. Borg Warner. We've been talking about this automobile sector out here. It's been pretty tough. EPS was in line but missed on revenues. Forward guidance is down. And, of course, they're real big in making transmissions, especially for, what do you call them, light-duty trucks, light and medium-duty trucks? I think that's probably the way to put it. Anyway, they thought especially that business in the medium-duty trucks, from what I read earlier, was going to be fairly weak. I like their transmissions in boats. I had several Borg Warner's transmissions. They called them velvet drives, and they were pretty sweet. But I digress. Other things out here was CHRW, which is Robinson Worldwide. This one kind of fell off, downgraded to underperform from Credit Suisse. Target lowered to $65 from $68. Doesn't seem that much, but boy, it certainly did react to it. This has got a confluence level, which is going to act probably more like a congestion zone right around $66, but down volume, kind of a fairly decent reversal move from yesterday, almost a blow-off top with a gap down here this morning. And, of course, you got a gap down here at about $64, so I'd be looking at that too. Had a stock that was highly short. I thought it looked horrible, at least the chart did, but way too short. This was Lope. And here's some of the ones that are giving you the kind of moves that I was talking about, and that is bucking against these highs. You needed 2.3 million shares, and that came on the first high of October 30th of 2013, $50.48, 2.3 million shares. So what did we do? We got 2.1 today, but it goes right through it to 51.99 and right back into the trading range out here. And, of course, this for-profit education, it doesn't seem like a week goes by where we don't hear something bad or another FBI raid on one of these places. Probably don't want to paint with too broad a brush, but I think maybe the short squeeze was in on this one. I've seen a few of the other ones out here acting like that too, which makes me kind of worry out there. For stocks that are doing good, MD is not a bad one out here today. Beat by a penny, and revenues announced a $600 million buyback. So we had a little move on that one. MedX. And again, these things not holding their highs of a day out here. Let's go back and look at the S&P real quick. 1995, not that bad a deal. Went through the previous high of $60.08 from July 30th. Just needed 1.6 million shares. You got 1.3 million shares today. Looks to me like probably could fool around and go up and hit this April 1st high at $64.51. Other stocks of interest out here when we look at them. You just don't want to be a gold stock today. And our phone call of, was it Tuesday with John from Philly, probably a good indication of what you're looking at here. These companies are having fairly significant issues. Even if you bought them and gold turned around, you're going to have fairly defined levels of resistance higher. Certainly Yamana is back up here. Not a bad looking confluence zone from $6.90 to $7.32. But again, I would probably want that to be more like a nickel or a dime that I would play it. But I would also say that anywhere in that area would be probably, if this thing bounced and started moving back up, would probably be significant resistance in that area. So you've got to watch all these gold companies because all these people that have ridden these down and didn't get stopped out are probably thinking about the day that this thing will bounce and they can get out. And that's what's always problematic. I'm going to look at a few of the stocks that have been moving out here. Costco was kind of interesting, and again, some of the reasons why I've been looking at some of these things. Costco actually has a very good defined risk for confluence, and that goes back to $118. So if you should see some kind of failure out here, wouldn't look all that bad to 118. Now, what I'm looking at in Costco is what I see in a lot of these companies that are breaking highs, and that is a light volume break of the previous highs. In the case of the October 10th high, 3.3 million shares, and what do we have today? 800,000 shares. Yesterday we had 1.7 million shares, but today 800,000. Boy, I tell you what, it seems awful stretched at these levels, and if I was long, I'd have to take my cash. Not saying short it, but boy, if this thing pulls back under 131.41, that October 10th high, you've got to be very wary about it. And, of course, all retail has not been doing that well. You can always email me at path@tfnn.com if you'd like, and I'll try to catch it during the breakout here and try to answer it in the last segment. Or you can call me at 877-927-6648. And what else do we have? Spam is what I've got. I checked my email. I should have known better. I should have known. They were really pushing this stock early in the morning, and to me it didn't look like that big a deal, but boy, they were pushing the living daylights out of it on CNBC this morning. Or no, it wasn't. Maybe it was another stock. I think maybe it was another stock. I think it was. Maybe I'll find it. Oh, it was HAR. Sorry. Excuse me. But another one up here. You wanted to see this thing the last 3 days with 1.5 million shares. On Haynes Celestial Group, you got 437. You got 1 million shares yesterday, 300,000 shares today. So as we go through these things, you certainly don't get the volume that you would look like you want. And on a day like this, you should be thinking, man, we're hitting 2,000 on the S&P cash. Everybody should be piling in. We should be watching it. But a lot of these stocks, a little bit nervous out here. We're printing 2.46 billion shares right now on 1995 on the S&P cash. So, again, I have a feeling it's all going to be who blinks at the close today. So it'll be a very interesting close, and one that will listen with bated breath for Tom O'Brien in the next hour. I'm getting ready to put that worm on my tongue right now for that bated breath. I wonder where that actually came from. Did you actually put bait in your mouth at one time? Oh, there's an origin for almost all those things. What else do we have out here? Oh, I wanted to look at that HAR because they were absolutely flogging that this morning. And Yeah. See, it would be interesting to see some of these actually hold these highs. Let me take a look at some of the other ones. Okay. And, you got, you had a wide range out here. You closing lower than the open. Went 113.88. You did gap over this previous gap, which probably wasn't that big a deal. It was actually the heavy volume down day, was the 30th of September, with 1.8 million shares, 1.4 today. I don't know. You're getting a lot of these stocks out here that seem to be flogged by some of the commentators. Jarden. Maybe there's a longer term on this. Was watching Jarden over the last few days, and of course I think there's a lot of discussion over CEOs and getting back in the ball game and all that kind of stuff. January 14th high was $64.01, 2.9 million shares. So when we look at the last few days out here, 1.2 million shares, 1.4 million shares, 1 million shares, 1.3 million shares really haven't come with any kind of gusto in Jarden and some of these retail restaurants. Again, a lot of times you want to see lows tested with a lighter volume, and the opposite side of one that has me kind of scratching my head on this is you had three lows around that $54, $55 level. The first one was April 15th, 1.2 million shares. You had one at 55.10, 1.4 million shares, and then, of course, the last one was that October 15th low at 54.40 with 1.6 million shares. So you basically increased three times to the low, rocketed out, came up here. You got no volume at the top. I would be extremely careful with this one because this is the kind of pattern that can turn on you on a dime. I would make sure that I had puts under this if I decided to keep it, and probably more likely sell it. When we come back, we're going to look at Land's End, the company that Sears forgot and sold. We'll be back in a minute.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're trading out here at 1990 now. And we talked about in the first segment about Apple and what I thought was could be an issue with them. It may, you never have an alternate history, so we won't know what would happen if Apple, the news didn't come out about the GTAT bankruptcy issue, where they may be airing some dirty laundry. But it looked to me like it was foreshadowing the sales number of Xiaomi in China more than anything else. But again, no way to scientifically prove it either way. But what I was talking about was a close below 106.75. And a lot of times, especially if you're on the short side, they're going to make you pay for being on that. It's not going to be easy to hold through some of these things. And, of course, the big deal is when you make that cash to the downside. I've been buying additional puts and doubling up on some of my positions today with puts. I was going to come to the close and say, hey, that was it. I gave it my best shot. Market said I was wrong. Right now, the market's kind of telling me that I'm right. We'll have to see how this thing closes. But I'm looking at Apple now, and I'm thinking this thing looks like the way it's ticking down is going to head back to the low a day at 105.90. Certainly looks like that is a possibility. Again, I don't think everybody's going to run and start screaming down the street like the day of the War of the Worlds on it. But I think you could see kind of a slow exit stage left in this market, and I think it would do a whole lot. We certainly are getting the kind of intraday reversals that we saw in the 2000 time frame in the dot-com bubble. That's kind of what I've been looking at again today. You get this, probably the best description of it is just the tick, 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 tick up, the small ticks. Most of the day, and then a little bounce, and then by the end of the day you sell back off, and that's pretty much it. And we don't know the end today, but like I said earlier, any close below 1988.89 on the S&P cash would be a rather large signal, and I fear not, at least so far. We'll find out how well TrimTab's data actually is, but when I subscribe to that, they've got a pretty good note that there isn't a lot of cash coming in. So I don't really have to worry a great deal about that coming over the transom. And you could probably make an argument that a lot of people were going through this cycle with redemptions over the last 10 days, and those are going to hit the market. So, it may be one of these things. Again, I think by the time we get to Thanksgiving, most of the juice in this market, if I am right on the downside, is going to be out of it. But if you aren't a little nervous, like I said earlier, it is problematic. Now, I had somebody email me. Well, I got something here. Okay. The big move in Qualcomm has got me. That's kind of one of the reasons why I'm looking at Apple with a very jaundiced view too. That is this huge gap down on the 24th of what was that? July. It bounced the first time into it with 12 million shares. This time it's about 5 million shares. Then maybe this is as good as it gets for smartphone makers, not just Apple in general. Although I'd probably be shorting Samsung if I thought there was any cash in it. But I don't think so. I think our one play out here is that Apple pulls back and the market pulls back. And a lot of the stocks, when Apple has a cold, the market has Ebola. Maybe we'll look at that. Anyway, thanks for joining us again today. Sell when you can, not when you have to. And catch you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.